navigating the homeowners' property insurance crisis in California. Hi, I'm Kim Ward. I am a certified probate real estate advisor here in beautiful San Diego, California. My team and I, we help executors, administrators, and trustees through the process of preparing, marketing, and selling homes after a loved one has passed away. Lately, California homeowners have been having difficulty obtaining and even keeping their homeowners insurance policies. Natural disasters, extremely rising costs, and regulatory changes have worsened this crisis. What's causing all this? Well, we've had wildfires here in California, and insurance situations like that are causing the insurance companies to reassess their risk. Some insurance companies have actually left California entirely. Some are scaling back and some are refusing to continue to offer the insurance they had been offering to homeowners. Many homeowners, especially those that are in high fire zone areas, are being affected. Recently, we've been sharing about a specific condo complex that has been severely affected by this situation. This particular complex of over 400 units, 2 bedrooms, 3 bedrooms, even 1 bedrooms, is being affected by this insurance crisis because it's located on a canyon. After having a long conversation with the president of this HOA board, because our team is attempting to help a family to sell a condo in this community, he shared that in order for them to have any insurance, they had to cut the insurance in half, and the cost of it went up by 3 times. This is truly affecting this community, as they just had to raise their HOA monthly fee by $85 a month per unit, and they still don't have enough insurance. Why is this? Well, the wildfires of 2020 and 2021 severely affected the insurance situation. These fires caused billions of dollars of damage, and there was a big payout to all of those that were affected by the insurance companies. And again, insurance premiums are rising and many people are being dropped by their insurance company that they've been paying for decades. If you're finding this of value, please like, comment, subscribe, and hit that bell button to be notified of our weekly videos, and you wouldn't want to miss any of them. My husband Dave and I, we have been paying for insurance for decades, like many of you, and we have an investment property that recently got called out by the insurance company. They are looking at properties via satellite, maybe even using Google Earth, I don't really know, and they called out our roof on a particular property that we own in Santee. This roof is a tile roof, and they last years, decades. They didn't like the fact that they saw a substance on the roof, maybe some type of moss or something. And they insisted that we get that moss off of the roof. And we had to hire a company to power wash the roof, cost us $1,200, but now we still have insurance by the company. This is the type of thing that everybody is starting to experience here in California. So what does this mean, this crisis mean for homeowners and families that are now responsible for their loved one's home? It means that we have to start looking for alternative insurance. And that's often at a higher premium. And since you're watching this video on our Probate and Trust Help site, I want to share with you one thing about insurance, that when the home is vacant, your loved one's passed away, and the home is vacant, we recommend that you consider vacant home insurance. Now that's going to cost you 2 to 3 times the amount of what your loved one has been paying, but it is going to make sure that you are covered in the event that something should occur. California came up with an insurance that is called the California Fair Plan. Many people are moving towards that. It's kind of a last resort because it is much more expensive than traditional insurance, but many people have no choice. That's the only kind of property insurance they can obtain. And there are limitations with the California Fair Plan insurance coverage. A few things that is not covered is liability and theft with the California Fair Plan, meaning that if someone should fall down in front of your house and they sue you, you may not be covered. And theft, well, that's just theft. And what I was talking about earlier, that particular condo complex here in San Diego, when I spoke with the president, he said that they were trying to get the California Fair Plan to cover them, but was running into a situation because California Fair Plan will only cover up to $20 million of master insurance coverage. What the community had last year was over $100 million of insurance coverage. Now they're paying 3 times more for about $50 million of insurance coverage. And the president of the board, what he shared with me is that they are considering having to break the community apart into 5 different communities with 5 different boards so that they could have full coverage, meaning to get to the $100 million of insurance coverage, they would have to break up the 400 plus units into 5 different communities. Back to the limitations of the California Fair Plan, what homeowners are having to do is actually pay for even more insurance outside of covering the actual physical property that they live in. They want to fill the gaps that the California Fair Plan is not covering so that they're fully protected. One way to do that is with an umbrella policy. That is a policy that would cover all of the gaps in your insurance coverage. My husband Dave and I, we have a large umbrella policy to cover any and all insurance issues that may arise. As you can see, the California Fair Plan and the other insurance, property insurance coverage, it's putting a financial burden on California homeowners. Let's talk specifically about how the insurance situation affects property sales. The insurance availability is actually affecting some sales. We've had situations where the buyers weren't applying to get their insurance in a timely manner, and then they had an issue because they waited so long, and then we had to extend the completion of the sale waiting for them to get insurance. So we cover that now in any counteroffers that we do for our clients. We put that the buyer is to apply for insurance within the first 7 to 10 days of opening escrow on the sale. Another way that it's affecting the real estate market is that buyers are actually concerned about buying in these high fire areas. The challenges for you as a seller is that you and your real estate professionals have to navigate this insurance issue. And again, if your agent isn't aware to make sure that the buyers are getting their insurance coverage, there may be delays. So you have to maintain that issue also, meaning you have to get the buyers to make sure they're applying for insurance way ahead early on in the process. And what can homeowners do? Well, they can mitigate the risk by having defensible areas around their properties, meaning putting in things like sedum that are not highly flammable. And they can do whatever their insurance companies ask them to do to lower those costs by having less risk for the insurance company. Like what we just did with the $1,200 power wash of our roof. That's what the insurance company asked for. That's what we did. And remember, shop around. Shop around your insurance coverage. We hope you found this of value, all about California's insurance crisis. Kind of a dry subject, but it's important that you know. Please like, comment, and subscribe and hit that bell button, and we'll see you next week.